Good morning, everybody, and welcome to our webinar today. My name's Amy, and I'm the Communications Manager here at Moorepayhr. Today, we're going to be talking about the UK budget review, so announced last week by Rishi Sunak, all the details you need to know that affect payroll and HR for 2021 and 2022. So before we start, there's a few things to cover. We've got lots of people registered today, I think nearly 1,000, so we have muted your microphones. Now, that's just so that we can avoid any background noise, but we do want to hear from you. If you've got a question, just pop it in the GoToWebinar question panel. If you've got any technical issues, I will do my best to fix them. But obviously, if it's at your end, there's not much I can do. So pop those issues into the question panel as well. If it's something at our end, I will try and sort it out. But don't worry if you do have issues with sound or that kind of thing at your end, because the webinar is being recorded. I will send the webinar recording via a YouTube link later today, and you can watch that at your leisure. So again, if you need to take a call, you need to leave the webinar early, it's not an issue. I think that's everything to cover on the housekeeping stuff. So one more thing to cover before we get into the webinar. If my slides all move, there we go. So apologies, I know we've got lots of Moorepayhr customers on the webinar today, but for those of you who don't know us, just a little bit about Moorepayhr. So we make payroll and HR easy, and we provide payroll and HR software and managed services to about 10,000 customers across the UK. How we make payroll and HR easy is by focusing on the delivery of these 4 things. So first up is simple onboarding. Second is software that's easy to use. Thirdly, software with rich functionality. And then finally, it's all underpinned by flexible services that are delivered by our team of expert payroll and HR professionals. So what are we going to cover today? Well, first of all, we're going to look at what's new for 2021-22, so the key legislative updates that you need to be aware of. Secondly, we've pulled out some notable things that just require a bit of extra consideration that we just wanted to go into more detail on. And then finally, we've got the budget updates that specifically affect payroll, so what was announced last week. And then finally, we'll come to the live Q&A. So that is with our expert, David, who I will introduce in a sec. As mentioned, if you've got questions for David, please pop those in the question panel in the GoToWebinar box. Because there's so many people attending today, we might not get to all your questions, so apologies in advance, but we will of course cover off as much as we possibly can. So your presenter today, meet David. So David is our Senior Payroll Software Lead. He joined Moorepayhr back in 2018. He's got more than 25 years experience as a software engineer in the human resources industry, and he is therefore well versed in the complexity of payroll legislation. So David is essentially responsible for making sure that our payroll software is always up to date with the latest legislation. So definitely a man in the know and a very good person to have on this webinar this morning. Good morning, David.
Hello, Amy. Thank you very much.
I will let you take it away.
Thank you. So, yes, thanks all for joining. Let's get started with what's new for this tax year, 2021-22. We go to the next slide, please, Amy. So the first item we have, what we should be doing right about now is the gender pay gap. But because of COVID-19, the government has given us a 6-month extension for reporting this year. So instead of having to report by the 30th of March for public sector or the 4th of April for private sector, the date is now for both is now the 5th of October, and that's for a snapshot date of the 31st of March 2020 for public sector or the 5th of April 2020 for private sector. Now that you can actually start reporting for the current tax year as well from the beginning of April, so snapshot date 31st of March or 5th of April. So there's an overlap there between reporting of the 2 years, so you don't have to wait until after the 5th of October for the current tax year. And it's also been confirmed by the government that there will be no requirement to report for the previous year. So the year with the snapshot date of the 31st of March 2019 or the 5th of April 2019 So that was postponed last year, and they've now confirmed that there will not be a requirement to report. You can if you want to, but yes, there is no requirement, and they've made it clear there will not be a requirement for that year. So the next item is the national minimum wage. The new rates apply from the 1st of April. The big change this year is the national living wage now applies to those aged 23 and over. Previously, it was for those aged 25 and over. Now, the new rates are £8.91 for 23 and over, £8.36 for 21 and 22-year-olds, £6.56 for 18 to 20-year-olds, £4.62 for the under 18s, and the apprentice rate is £4.30. Now, the plans still remain that the national living wage will apply to those aged over 21 by the year 2024, and that by that year, the national living wage will be 2/3 of the median earnings. And at the same time, the plan is for the apprentice rate to match the under 18s rate. At the moment, we have this slightly strange situation where you can leave school, go into work, and if you're then offered apprenticeship, you'll actually take a pay cut, which, yes, not appealing to some people. So, yeah, they'll get those two aligned, which will take away that disincentive for apprenticeships. And then from the 4th of April, we then have the changes to the statutory payments. And you can see the list there: statutory maternity pay, statutory adoption pay, statutory paternity pay, statutory shared parental pay, and statutory parental bereavement pay. Now, the weekly rate increases to £151.97, but there's no change to the way any of those values are calculated or the amount you can reclaim. So I won't go through that again now. And then also from the 4th of April, we have an update to the weekly rate for statutory sick pay, which is now £96.35. Thanks, Amy. If you can move on one. So what's new for 2021? It's the 6th of April. We have the new tax and NICS rates and thresholds applying across the UK. Now, for all 4 home nations, the personal allowance is increasing to £12,570. For England, Wales and Northern Ireland, the tax rates and thresholds are 20% up to £37,700, 40% from £37,701 to £150,000, and then 45% over £150,000. Scotland's got have exercised their right, and they have a different set of rates and thresholds. So for Scotland, it's 19% up to £2,097, 20% for £2,098 to £12,726, 21% from £12,727 to £31,092, 41% from £31,093 to £150,000, and then 46% above £150,000. Now, Wales does have the option of doing something similar to Scotland, but for this year, they've said they won't do so. Whether they do so in future, that's, yes, we'll have to wait for announcements from the Welsh government for that. The emergency codes across the UK for this coming tax year are 1257L W1, 1257L M1, and 1257L X. Now, for national insurance, because these go up in line with CPI, and CPI was so low this year, the lower earnings limit actually remains the same at £120 per week. The primary thresholds increased by £1 a week to £184. The secondary threshold also increases by £1 to £170, and the upper earnings limit increases by £5 to £967 per week. The national insurance rates all remain unchanged, so I won't bore you by going through those. Now, from the 6th of April, we also have the delayed off-payroll working rules for the private sector. So this was all set to go live on the 6th of April last year, but because of COVID-19, the Chancellor postponed it for a year. I think many of us welcome that postponement. I know many people were hoping he'd postpone it again, but he probably feels he needs the money more than usual this year. So yes, they apply from the 6th of April. Now, we also have an increase in the thresholds to student loans and the postgraduate loans. So again, this is from the 6th of April. So we now have a new plan type 4 for Scottish student loans. And now that applies to all new and existing Scottish student loans. Now, as payroll people, we don't have to do anything. We'll just get a normal stop and start notice and we just apply that. But from the 6th of April, you may be getting plan type 4s, and you can only have one type of student loan. So one plan 1 or one plan 2 or one plan 4. You should never have 2 or 3 at the same time. Now, you still can have a student loan and a postgraduate loan at the same time. And if you're in that situation, the postgraduate loan takes precedence if there's not enough cash to pay the student loan. So just going through the new threshold for plan type 1, it's for earnings above £19,895. For plan type 2, it's above £27,295. And for the new plan type 4, it's above £25,000. And the deductions are still at 9% for any earnings above those thresholds. The postgraduate loan threshold remains at £21,000, and the deductions there are still at 6% above that. Thank you, Amy. If we can move on. So what else have we got new this year? We have a new starter checklist. Now, we did have a large section asking about student loans that's now been revised. And I, for one, am not a great fan of the new wording. The question is, it seems to be worded the wrong way round, in that there are 4 statements, and if none of them apply, then you have a student loan. I think we need to check when we get the starter notifications that the person has understood what they're doing, and normally if you say no to everything, you move on to the next section, but it's the other way around this time. If you say no, you then have to fill out to the current section to say which student loan you have. So just want to be careful there. The next item is the CO2 emissions and car and van benefits. So the CO2 bands have increased by 1%, as previously announced. There's been no change to what was announced 2 or 3 years ago. What's going on there? And as far as we know, there'll be another 1% increase next year. The car fuel benefit, that increases from £24,000 to £24,600. And the van fuel benefit increases from £666 to £669. And the cash equivalent for private use of a van will also increase by £10 to £3,500. Now, we've just had a confirmation of the employment allowance, and in fact, that does remain unchanged at £4,000 for the employment allowance, and all the rules on that are unchanged as well. Now, we have had this an update to the post-employment pay notice changes. So there's now a new alternative calculation method where an employee's pay period is defined in months, but the notice period is not in whole months. There was an anomaly in the previous guidance, and if you use that to calculate the values, you get some strange answers, whereas they've now recognised that you may well have someone who's got a notice period of 6 weeks but is paid monthly, and the new guidance gives you the method of calculating the values you need, yes, using the correct periods. So yes, I think that's that slide, Amy, if we could move on. So still on the 6th of April, the redundancy pay, the weekly cap on the statutory redundancy pay increases from £538 to £544 for England, Scotland and Wales. I'm still awaiting confirmation of the value for Northern Ireland. And then moving off from the tax year end, the real living wage, if your company signed up to the Living Wage Foundation, the new rates must be applied by the 1st of May. They're normally announced in November, and companies who've signed up must apply them between November and the 1st of May. And here we have an increase from £9.40 to £9.50. And for those in London, the increase is from £10.70 to £10.85. And the final thing for for what's new this tax year is October 2021. That actually brings us back full circle to the gender pay gap reporting. That's the new deadline for gender pay gap for the previous year. So thank you, Amy. That's lovely. And now we are moving on to other notable updates. Deep breath, Brexit. If you're anything like me, you'll be thinking, when will this ever end? And I'm beginning to think it won't, but there it is. We've got to get on with it. This is just confirmation of the rules for national insurance for workers who temporarily move from one jurisdiction to another. If you just excuse me a second. Unfortunately, the rules weren't they weren't able to ratify the rules before the 1st of January. So there was a little bit of confusion for a few weeks until the UK government, and it wasn't actually the European Union, it was the individual governments within the European Union ratified the rules to apply to both UK workers temporarily working in the EEA or Switzerland, that's the European Economic Area, and workers from the EU, Iceland, Liechtenstein, Norway or Switzerland who temporarily come to work in the UK. I did mean to check what the difference was between the EEA and that list of countries that I've just mentioned, but I think I had too much to do. But yeah, so if you do have people coming from Europe to work in the UK, or you're sending people over to Europe for temporary work, which I believe is up to 2 years, as long as you fill out the right paperwork, you can still, the employee can still pay their national insurance or social insurance in their home country, and they don't have to pay it in their where they're temporarily working. The old rules still apply to anyone who was already abroad on the 1st of January. And as you can see, we've put some links there to the guidance from the government. Don't really have to copy that down. We're sending the slides out, so you'll get that link. So I think that's enough said about Brexit. Amy, if we could move on. Thank you very much. So payrolling expenses and benefits. This is something that HMRC have been trying to get us payroll people to do for a number of years. The idea is to reduce the number of P11Ds that are sent to HMRC, and so reducing the amount of work they have to do to help us get our tax right. And yeah, it's getting tax right is important, so we don't mind about that. But what happens this year is you now must register if you wish to payroll your expenses and benefits. In previous years, you've been able to have informal arrangements, but these no longer apply. So once you've registered your the benefits that you're payrolling, you just report them on the FPS at the same time as your PAYE. The benefit, of course, is if you manage to payroll all your benefits, then you don't have to provide employees with a P11D. But you may still need to submit a P11D brackets B, so you can pay your Class 1A national insurance contributions. So yes, the last points there, as I said at the beginning, yeah, you must register, and HMRC have made it clear this year then they're no longer going to accept the informal arrangements. So yeah, thank you, Amy. Now this one, I get a bit excited about these sorts of things, about when we get some discussions about employment law and who's a worker and who's self-employed. So this is all about the gig economy and the recent Uber ruling. Now the case had been going through the courts for a number of years. It was first taken to an employment tribunal back in 2016, and it's finally been settled by the Supreme Court, so it can't go any further. That's it. It has been ruled upon. Now, unfortunately for Uber, they lost at every stage. It wasn't that they lost and then won on appeal. They lost the appeal, they lost at the appeal court, and they finally lost at the Supreme Court. So just to remind you what was going on, two drivers claimed that they were workers and therefore were entitled to holiday pay and to be paid minimum wage while they were working. Uber claimed that the drivers were self-employed, so they were not entitled to any holiday pay or minimum wage, and that yes, that they were self-employed. Now the court ruling looked at the facts of the case, and it said that because Uber controlled the employee's earnings and I shouldn't say employee, should I? Control the driver's earnings, and the driver was not able to set their own price for a journey, and also that Uber required the drivers to drive a number of journeys, and if they didn't, they would be disciplined. The courts ruled that they were workers, and so they were entitled to holiday pay and national minimum wage. Now, initially, this came across and it's like, wow, this is a game changer. The gig economy is no more. Everyone's a worker, but unfortunately, that's not quite the case. In this particular case, it applies to the two drivers who brought the case and nobody else, unless any other drivers bring a claim. Now, any driver at the time could bring a claim. So we'll just have to wait and see if anything does happen from that. But what Uber have done between the initial tribunal and now is they've changed the way they engage with their drivers. So the main arguments that the drivers used to say they were workers now no longer exist. So the gig economy still exists, and Uber, if you work for Uber now, you will be self-employed. So after nearly 5 years, what have we learned? Well, the main point for me is that it's not the wording in a contract that's important. It doesn't matter if you say someone's self-employed or if you say they're a worker. It's actually determined on the facts of the matter. So the courts will look at what the person does and how the company interacts with that person, and they will use those facts to then decide whether that person is a worker or an employee or self-employed. So if you do have people in the gig economy, it may well be worth looking at how you interact with your other people you work with if you think there might be a problem with their employment status. So thank you for that one, Amy. Should we move on? Now, the big thing that was announced in the budget, many of us were slightly nervous about this. We all expected there to be some extension to the coronavirus job retention scheme. However, if you remember back to September, October last year, the Chancellor talked about the job support scheme, which was well-meaning, but it was quite complicated to discuss and to see how things should work. The initial plan was easy, 1/3, 1/3, 1/3, but when you tried to work it out, it was much more complex than that. So we're very glad that he just did a simple extension to the existing coronavirus job retention scheme. So the budget's confirmed that instead of closing on the 30th of April, as previously announced, it will now continue until the end of September. Now, this is well beyond the end of lockdown restrictions. Well, hopefully it's well beyond the end of lockdown restrictions, but there are still some sections of the economy that will be suffering from restrictions, either ongoing restrictions, or they won't have had the ability to work through the previous year to be able to continue as normal through this summer. Now, there are some slight changes in that for May and June, employers will still be able to claim a grant of 80% of an employee's normal earnings, capped at £2,500, and the employer will just have to pay employers' national insurance and pension contributions. Now, that's it. Exactly the same as it has been in for the last few months. But from July onwards, we have a change, and this is similar to the changes we saw around the same time last year, in that from July, employees still receive 80% of their normal pay, but employers can only claim back 70%, and that will be capped at £2,187.50. And the employer will be required to fund the extra 10% plus the employer's national insurance and pension contributions. For August and September, the employer's contribution increases to 60%. Sorry, I said that wrong. The employer's contribution increases to 20%, and employers will only be able to claim 60% of employees' normal working pay, and the cap there is £1,875. The other change we need to mention is from May, employers will be able to furlough employees who have been reported on an FPS between the 20th of March 2020 and the 2nd of March 2021. The previous cut-off date was the 30th of October 2020. So there's a whole new group of employees who can now be furloughed if employers need to do that. So that's that one. Thank you, Amy. And so what else was in the budget for payroll? So the coronavirus job retention scheme, as I've just mentioned. Now, this was the most anticipated budget for a generation. Possibly the most leaked budget for a generation. And if I carry on like this, it'll be the most cliched budget for a generation, but pick whichever one you prefer. So we've had the CJRS, which we just mentioned. The Chancellor also confirmed the previously announced personal allowance and stated that this and tax thresholds would then remain frozen until April 2026. Previously, the plan was to increase them in line with CPI. Now, the same applies to national insurance contributions. These rates and thresholds were confirmed. They'd been previously announced. But again, they will be frozen until 2026. The Chancellor also announced a new £100 million task force, which will consist of 1,265 HMRC personnel to tackle fraud in the various COVID schemes. Now, you'll all have seen reports in the news. The Governor of the Bank of England suggested it might be between 5 and 10% of all CJRS claims were fraudulent. It's very difficult to know how we got that number, but anecdotally, many of us have heard stories of employees being on furlough but still having to work, or employees being furloughed and then not being paid the money. So there are many possibilities for fraud, and rather than just letting it all go, personally, I think it's a great thing that the government's putting some effort into trying to track down those that are breaking the rules. So trying to stop people doing so in future. Now, what else did he talk about? So Richie Sunak also mentioned the 8 free ports. There's lots of details about free ports, but then nothing to do with payroll. So the only thing that's really interesting to us, unless you're lucky enough to be in a free port, is that employers will benefit from an exemption from employers' NI for certain employees. Now, I did do a little bit of digging, but I didn't really come up with much as to what certain employees are. I imagine that's just a catch-all for most employees will be exempt from employers' NI, but there might be a certain category, again, to stop fraud, of people saying that all their staff work in the free port when in fact only one person does and the rest of the staff are working back at the factory as normal. And the final thing from the budget that's worth mentioning, again, this is something that was previously announced, the employers' NI holiday for veterans. This is a very welcome NI holiday, and it's understood that veterans sometimes find it slightly more difficult to get back into the world of work in civilian life after they've been on active service. So the government's giving a 1-year holiday from employers' NI. Unfortunately for this year, it's going to have to be a manual claim, and you'll have to make that claim in April 2022 for any veterans that you've had on your books during this tax year. The plan is that there'll be a way of including this on the FPS from April 2022. We're assuming that's going to be a new NI category code letter for veterans. So if you do employ veterans this year, do keep records of that. Now, it doesn't have to be a veteran's first job. The NI holiday applies during that first year. So if you take a veteran on, even if they've had a previous job for 6 months, you can still claim the remaining 6 months employer's holiday for yourselves. So I think that brings us to the end of the budget, and moving on. So this is for the Moorepayhr customers who are with us. Apologies if you're not, but just to remind you that yes, our products have now been updated with the latest legislative updates, and this includes the new statutory rates, as I mentioned earlier, the CJRS extension, and also we have the IR35 / off payroll working. That's available from the 6th of April. And we'll have the release notes with you very soon, I believe. So I think that brings me to the end of my presentation. Thank you very much, Amy.
Yeah, it does indeed. Thank you so much, David. That was great. So we are going to do some questions now, but just before we do, I just wanted to point out some useful resources, and I can share links to these alongside the webinar recording. So we've got our tax VAT card for 21-22 ready to go. David has lovingly put this together, so you can order a printed version or download a digital copy. Just to note that Moorepayhr payroll customers are getting a printed copy in their payroll packs as standard over the coming months. So no need to order yours, but everybody else, if you'd like one, then they're completely free of charge. We've also got our bi-monthly employment law guide available. Our payroll legislation guide for March and April will be ready very soon, and we'll be sharing that next week. If you do need some support with off-payroll working, we've got a guide and we've got a really useful past webinar recording as well. And we've got a couple of recent blog posts as well. So one is covering some of the key things that David has just mentioned in terms of the budget updates and how they affect payroll. And another one is on the gender pay gap reporting and the 6-month extension. We've also got another one as well on the kind of the implications for your furloughed staff and your gender pay gap reporting. So I'll make a note and I'll share that one as well. So lots of useful things, all available in our Knowledge Centre on the website, but I will share the links as well. So let's get to some questions. So I know we've had lots, we'll cover off what we can. Now there's a couple from Moorepayhr customers that are quite specific, so we will come back to you directly after the webinar. But a couple here, so which one first? Let's have a look. So what is the situation with NI numbers being issued by HMRC? And that's from Paulina.
Hi, yeah, there has been a problem. There's a big backlog of issuing NI numbers. So many HMRC staff and government employees in general actually have been taken away from their normal jobs to work on both Brexit and the coronavirus job retention scheme and other government schemes over the COVID-19 crisis. So unfortunately, NI numbers are the ones that's one of those that have suffered. I've not heard any news of any change to the current situation of they're only giving out emergency numbers. And I don't know what an emergency number is off the top of my head. Hopefully we'll start to get back to a more normal situation. Obviously now Brexit's happened. There's still an awful lot of government documentation on Gov UK, which needs to be updated. So there are people working very hard on getting that up to date. And similarly, HMRC, many of the staff are working on the various schemes to do with COVID-19. So over the next 6 months, we really hope that will start to tail off and there'll be fewer people claiming the CJRS and yeah, fewer requirements. There's this self-employed scheme as well, isn't there? So hopefully people will become available again to work on various other tasks. I know personally I've had people call me from within Moorepayhr and saying, you know, do I have any contacts within HMRC? They really need this piece of information, or they need something done and they can't get through. And unfortunately, I don't. I'm in the same position as everybody else. It's ring the employer's helpline and yeah, hope you get through.
Yeah. Another question, so this one is from Joe, and so Joe says that they're confused about the P11D. Can I still submit these instead, or do taxable benefits have to go through payroll now?
I think you can still do a P11D. It's just if you, the change is if you are payrolling your benefits, you have to register. So previously people have just been payrolling the benefits and not registering with HMRC what the benefits were, and HMRC were accepting that, whereas from this tax year they're no longer accepting that. If you are going to payroll your benefits, you do need to register. The change isn't that you have to payroll your benefits. And off the top of my head, I can't remember what was happening with that, because I know HMRC did want us all to payroll all benefits. They were surprised how difficult that was when we pointed it out to them, but yeah.
A question from Fleur, which is, how do you order a copy of the tax fact card? So Fleur, I'll send you a link so that you can pop your details in, and we can get that across to you in the coming weeks if it's a printed one, or obviously straight away if it's a digital one. A question from Michaela, which will be for David. So I have already officially registered with HMRC to payroll benefits for 2020-21. Do I need to re-register for 21-22, or does the registration continue on a rolling basis?
I have to be totally honest here, I don't know. Yeah, that's one to look
take
into.
Away. Yeah, and we'll come back to you on that one and confirm, Michaela. Okie doke. A question from Jeanette. What kind of benefits are we talking about for the P11Ds and payroll?
So yeah, ideally HMRC would like us all to payroll all our benefits. As I just said, when they told us, we were all like, that's quite difficult, and they didn't believe us, so we pointed it out to them how some benefits are really easy. If you have say health insurance at the beginning of the tax year, you know how much that health insurance is, so you can spread that out across the year, but not all benefits are as easy as that. And so yes, there can be a lot more work to do. You know, cars are the obvious one, where you change cars halfway through the year, or a car goes off road and you don't have it for a period of time. The cost of the benefit at the beginning of the year isn't known, so it's difficult then to payroll it effectively. So yeah, like I say, the reason I mentioned it was just that if you are payrolling your benefits, you do need to register. But if you're not, you just carry on. It's worth checking with HMRC that whether you need to payroll. But that's not the change this year. The change isn't that you need to payroll your benefits. It's just that if you are, you must register.
Yeah, okie doke. A couple of people who've joined, like requesting a recording, all good, we'll send that to you by the close of play today. A question from Leslie, do you know the end date for claiming back SSP for COVID absences? And if we don't, it will be in our payroll ledge guide.
Yeah. Not off the top of my head, no.
But it's in there. So
yeah.
Leslie, I'll send you a link to our payroll legislation guide. And then we've got a few more people requesting a link to the tax rates card. So yeah, again, that will all be with you. And then I think apart from that, questions are specific to Moorepayhr customers. And as mentioned, we'll come back to you directly on those. So thank you very much for your questions, and thank you, David, so much for answering them. We're coming to the end of our 45-minute slot, so I will wrap things up by pointing you in the direction of our Knowledge Centre, which is just full of free to use and download resources created by our experts, including David. So have a look around in there. You can use the search functionality to look up topics, or you can browse by topic. And as mentioned, I'm going to send you lots of useful links relating to today's webinar as well, so that will all be with you by the end of today. So thank you so much for joining us. We hope you found it useful. A massive thank you to David for taking the time to go through all of that information, lots and lots to cover, but that was really useful and insightful. Thank you, David. And on that note, enjoy the rest of your day, everyone. Thank you.